Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to reveal the juicy bits. Today we are diving deep into Modus Holdings Inc.'s latest report, a filing that promises some interesting moves behind the scenes. Before we dive in, if you enjoy getting these straightforward breakdowns of complex financial documents, do us a favor, hit that subscribe button and ring the notification bell so you never miss an update. And hey, we've got a fantastic community building on Discord where we discuss these filings in real time. Check the link in the description below to join the conversation. Alright, let's get straight to it. Modus Holdings Inc. has put out a Form 8K. This is like a company's daily diary telling us about important events that happened recently. The big news here is about a significant deal involving their stock. So what's the deal? Modus is doing something called an exchange agreement. It's basically a stock swap. They are giving up one type of stock for another. They are exchanging preferred stock for common stock. Specifically, they are trading Series C preferred stock for Class A common stock. Now, these aren't just any shares. We're talking about 300,000 shares of preferred stock being swapped for a whopping 1140 shares of common stock. This is a pretty significant reshuffling of their ownership structure. And who's on the other side of this deal? Well, it's a family trust tied to the company's chief executive officer, William Alessi. The trust is the Alessi 2023 Irrevocable Trust. And while Mr. Alessi's spouse is the trustee, the shares are considered to be owned by Mr. Alessi himself. So this is essentially an in-house transaction moving stock around within the leadership sphere of influence. Now, there's a catch related to those common shares, the ones they're giving out. The trust receiving them has agreed not to sell or transfer these newly acquired shares until June 13, 2026. You can think of this as a lockup period. It's designed to prevent a flood of new shares hitting the market right away, which could potentially drive down the stock price. It also suggests a long-term commitment to holding these shares. This exchange is happening without being registered with the government. This might sound a bit sketchy, but it's allowed under certain parts of securities law. They are relying on what's called an exemption from registration. This is because it's an exchange of securities of the same company and there isn't any new money coming in directly for the issuance of these shares. So they are kind of swapping apples for apples within the company's capital structure. The filing also points to Exhibit 10.1, which is the actual exchange agreement. This is where all the nitty-gritty details of the deal are laid out, but based on what they've told us publicly, it's a pretty big move in how the company's stock is held by its top leadership. While this filing doesn't contain detailed financial tables like a quarterly earnings report, it gives us a strong signal about how the company is being managed and how ownership is being structured internally. The fact that they are swapping preferred stock for common stock with a trust controlled by the CEO could indicate a few things. Perhaps they are simplifying the capital structure, or maybe it's a way to consolidate voting power or even to provide liquidity for certain family interests without diluting public shareholders too much. Looking at the broader picture, trading preferred stock for common stock can be a strategic move. Preferred stock often has different rights and terms compared to common stock, like fixed dividends or priority in liquidation. By exchanging it for common stock, the Alessi Trust is essentially taking on the more volatile but potentially more rewarding upside of the company's performance. This aligns their interests more directly with the common shareholders. This type of transaction, especially when it involves the CEO's family trust, often signals management's confidence or a strategic plan to reshuffle assets. The lockup period is key here. It shows an intent to maintain stability in the share structure for a considerable time. It suggests they are building for the long haul rather than making short-term speculative moves. Now, what does this mean for Modus Holdings? On one hand, it's a clear sign of leadership actively managing the company's ownership. On the other hand, without knowing the specific terms and reasons behind exchanging preferred for common stock, it's hard to judge the full impact. Is this a move to simplify for a future sale or an internal restructuring to gain more control? The biggest takeaway here is the significant exchange of shares by the CEO's trust. It's a large volume of stock being moved, and the restriction on selling it for over a year suggests a long-term outlook. This is something investors should watch closely as it could affect the company's future share dynamics and potentially its valuation. So that's our quick decode of Modus Holdings 8K filing. Focusing on this stock exchange tells us a lot about the internal strategy and leadership's involvement. What are your thoughts on this move? Do you think it's a positive sign for the company's future? Let us know your opinions in the comments below. If you found this breakdown helpful, please give it a thumbs up and consider subscribing to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next video.